Good afternoon, traders. Welcome to Trade Setup and the live stream for the 13th of Feb, Monday the 13th of Feb. Hope we all had a good weekend, great weekend, just relaxed and enjoyed ourselves. I personally got a bit of work done. We've got our son's birthday coming up in a few weeks, so it was lawn times, a bit of trimming, bit of lawn, so that kept me busy all weekend. And then back into it this morning to see the markets did push higher, about 20, I think they're roughly up about 20 points at the moment. So what we'll do just before we get started, as per usual, just go through the. You can join us on you can join us at Trade Setup on Twitter, top left corner. If you just go to that site there, Facebook, you can just like us on Facebook if you can, or jump into YouTube and just subscribe to the YouTube channel, and that way you'll get all the alerts when we do go live for a live stream. So, and of course, we've got the old the general advice warning. We don't give personal advice at all. Anything we discuss, even if you put up a trade, something you want to look at, we just discuss it on a general advice basis. It's not a personal opinion, it's just what we see could be happening. So we don't take into account anyone's own positions or anything like that. We'll get started. We're going to take a look at the markets, obviously. We'll get into that. Take a look at what happened on Friday night in the US session, which was quite a good session. I didn't quite expect it to kick on a bit stronger there, but it's generally when you least expect it is when it happens. So we'll just keep that in mind. I'll discuss more about that in a second. And we've got just let me find out who sent it through. We've got something to look at, which is good. Alex, no, it's not the one. So we just got somebody who sent through an email. It was nice. It's got a company to look at anyway. DGR, that's the one. Nick, if you're listening, mate, thank you very much for the the good comments, and I hope it's great that you're enjoying the streams. We try to do what we can. Hopefully, giving you a bit of education as well. There's some positive news, something to watch, some stuff to look for. And we've got. You want to take a look at DGR? We'll take a look at that today for you as well. Copper gold one. So if anyone's got DGR, I don't know the exact name just yet, but we'll take a look at that as well for Nick. But like Nick did, if anyone wants to send through, you can either send it through the chat on Trade Setup or just send it through to support at tradesetup.com.au. Just if there's anything you want to look at, or if there's some trades that you're having a few issues, a few little things with your trading, just send it through and we'll see what we can talk about anyway. I mean, not something to be right or wrong, but it's always good to have another opinion, a different view on the overall market. Anyway, let's get stuck into it then. We'll take a look at where we're at the moment. Where is my chart? We're up about 38. So kicking along strong. That market, we've just been looking at this for a while. Once it got through on the ASX, what was it, 56.75? It's just gone on strong. A couple of good days, solid day on Friday. And it wasn't 57. It wasn't this. Actually, no, it was this little high. And you can see we were talking about this for a while. We were expecting that washout, which we got that to a tease, but it's just been beautiful. And that high there at 56.70, once we got up through there, it was a couple of good days. And that was, we could have ran into a bit of resistance at these highs at 57, what are they, 20? 57, 14, 15. The market's just pierced straight through that on Friday, which is good. Finished above that little zone there, and we're kicking on strong. So that, what I would expect if that's the case, we've got a bit more continuation. I expect us to get through these highs just above 58 and start attacking towards 6,000, which it's still a while off there. What are we at? 57, 58, about 240 points away at the moment. But I think it's looking like it's on the cards. The weeklies are looking good, holding higher lows. So really, if we build this, if we don't do much from here, and these last couple of days are quite strong. So that's why it would lead me to believe it's just going to pop up straight up through 58, 50 and go on to 6,000 and just give that a bit of a nudge. But we'll see how it goes. It's all looking good. The market's looking good. We've got our list of stocks for Trade Setup going great. We got out of one today, and we took a partial on one today as well. We got stopped out of one, AHZ, which basically it still looks good. There's some good underlying news, but we got stopped out of that. Had to put your risk in there somewhere. Got stopped out, but that'll still be on the cards. We'll keep an eye on that. obviously that could really kick on. It's probably more got to do with the news release. If they get on board something, that should just go. The other one was IFN. No, we raised a stop on that one. A2M, A2 milk. Uh, we're trying to strangle that. We're looking at, if we just get onto the actual chart there, we're looking at getting up, it's going up there now, 245 or 235. So what we were really looking at that stage was, as of Friday, got it at 242, I think, high on Friday, which is a bit of a bummer. And today it stopped us out at only on a partial exit at 235. So we locked in some gains there. Just wanted to lock in some gains, considering we're up about 15% at the time. It's good, it's handy just to lock in something, especially when you're looking like, you know, the daily's getting a bit extended. The weekly's still got some to go, but I'm always inclined to take some off the table, especially when you're sitting on over 10%. It's always a good thing, can't hurt, and just let the rest run, see what happens. Um, so yeah, it could be actually, what are we, 241 at the moment, could kick on. It's at a high of 242 and a half, so you'll find that it'll probably touch 245 anyway. So either way, we're taking a partial on that one. IFN is what I just mentioned before. That's kicked through that most recent high just above 105, 105 and a half, I think it was. Maybe it's 106, high 106. Only got half a cent through that, which is just running into that resistance there, 106 as well. So we're just tightening that up as well, only because it's had a good, solid run up. It's done a lot of. The good thing is it's held these highs around that $1, oscillated around there, and it's built a couple of, it did wash out these lows on this, rejection bar down through there, and then held a little higher low there, which the last 3 days has been fairly solid. Today is probably break even at the moment, but we're expecting that to be pushing through that 106 level. And we just want to see if we can get it running up to 120. We'll see how that plays out. It's looking good anyway. That underlying price structure is looking nice. It's just on that week, you've had a good solid run up, push down, and it really hasn't washed a lot out of the market. Wouldn't be surprised if that actually is still looking good, to be honest. Wouldn't be surprised if we do back off, build another high low, and we'll probably get stopped out, and we'll just keep an eye on it to go again. But if it just punches up through these highs, then the next port of call is really up towards 120. We'll see how that goes. Where are we? Let's get on to just the overall market at the moment before we get too caught up. So today, before we look at the a couple of currencies and the S&P, we're just going to go through a few things. Obviously, anyone that's been on here for a while and been listening for a while knows what we look for in our technicals. Obviously, the fundamentals we don't need to talk about too much. That's they are what they are really. But technicals, everyone's got a different view of what they look for. Where we really are worried about is risk management. We consider ourselves risk managers, not traders. You put on a trade for a certain reason, but one day to the next could be exactly the same setup and they could work out differently. So when it comes down to it, all we're really trying to do is put the probability of a trade, a particular setup that we like seeing, get good at it, get good at seeing it too, and just understanding the mechanisms behind it, why it should move, what you would expect if it moves well. And then obviously you have to, the last, I guess, key to the puzzle is having your risk management in place, knowing where you've got to get out. You've always got to know that, because if you don't, and it goes against you, then you can be caught holding a terrible position. You've got to know what you're going to do if it goes wrong, just as much as you've got to know what you're going to do if it goes right. Because like I said, if they're from one day to the next, they might be exactly the same setup, low for low, high for high, or whatever. It looks exactly the same. You expect the same outcome, but they could be completely different outcomes. You just don't know what's going to happen from day to day. So that's why we like to consider ourselves risk managers, because you manage your risk appropriately. If it takes off like you expect, like we always expect, then manage your risk appropriately on the way up. And if things look extended, maybe look at taking some off. But you're just trying to, like I said, manage that risk. It's not so much sit there and go, okay, this one's going to the moon. Great if it does. If you manage it correctly and it's a strong market, you're going to manage it. You're just going to follow it up. That's great. You try to get out as much out of the trade as you can. So, and if it rolls over and doesn't do what you expect, you know exactly what you've got to do. So you're not having to question it. You're not questioning yourself. You're not questioning the trade. You just get out and start again. If it doesn't work, there's a reason, and whether you know it or not, it doesn't matter. You just got to get out. So that's what we're looking at. We just want to look at a few things, and saying all that, We just want to look at a few things of what we look for in trades. And so for anyone that's watching this for the first time, or hasn't really sat through some of the streams when we talk about what we look at, feel free to whack in any questions too. If there's something that you just think I'm talking rubbish on, which I tend to do, just ask my wife uh, or my father-in-law if he's listening. um, just whack it in the chat. Ask me what am I talking about there? I don't believe that. What about this? There's nothing wrong with a different opinion. That's always good. If you help me, I'm all for it. If you don't, get off. No, I was just joking there. In a bit of a funny mood today. So let's get into it, guys. How are we today? Just to know someone's out there having a bit of a listen. Like I said, anything put through into the chat. And we'll take a look at the CFDs. And like I said, we've got a, where you want to look at, firstly, just the ASX. Yeah, that's on the 30-minute chart. That's looking strong. Thanks, Dave. Yeah, that's looking, I do like that. I mean, this is our washout that we saw, good support level around that 56. CFD is give or take a few points off 56, but essentially the same type of price action, what we're looking for. We did get that move down, and that was, one push up off that 56 after, previously touching down on that level. Still held trend, pushed down, held a lower high, and then when you get a day like this that can wash out a major level, but then bounce straight back, can be sometimes you just got to be wary that if your mindset's set short, you think it's going to roll over. You just got to watch what you see and just understand what could be happening, and just think, okay, that it did wash out a level, it didn't go on with it. If that was going to go on with it, it should have. It should have. If it was a weak market, it should have just sold off, and should have gone hard. But I think the fact is, I think it opened down there, traded down on the open, and then pretty much the rest of the day closed up, and it broke a few key minor levels and closed up for the day. So that's really a more of a bullish sign than anything. You just want to wash out. I mean, it's nothing new. Pretty much everyone can see, does a bit of technical analysis, can see that was a fairly key level at 5,600. So for the market to push through it, and then pop back up, it's really just washing out some traders. And Devon actually taught me this a long time ago. Something to watch out for is, and we've talked about this before, and we're just discussing it again today. And I'll show you a fantastic example on the S&P is when something's clear, the market's clearly going up, clearly going down, for it to continue, and it's starting to get stretched, you know that if everyone can see the same thing, it's fairly clear. Everyone's set in a position. So for it to change or to continue, it needs to get some people out and put them on the sidelines, whether it's a washout or just take them off guard. And sometimes, if a market's set short, like we'll look at in a second is the S&P, we know that there would have been a lot of traders by looking at the charts and the proprietary signals we look at. We knew that there was a lot of traders set short on that, but the structure was actually looking good. So that that's probably going to wash a lot of people out on the upside. All those short traders that are trying to jump in and just got a bearish tone to the market, or they think it's going to be bearish anyway. So what that was doing is just the path of least resistance in that case was up. So when everyone's thinking, oh, this is going to break, we're going to go lower, let's just get out. If it breaks that level, we'll get out of some positions. The market knows that. We can see that, can wash them all out. You get a whole lot of exit. They're back on the sidelines, and then it starts lifting off that support zone and breaking some key levels. The key level initial was at 56.75, which we mentioned. It's popped up through there and just kept going. So anyone that's sort of been washed out, whether they're the old proverbial pissed off and they want to get back in, and they're jumping back in. So it's given fuel. It's released energy out of the market, ready and set to go back in, and they don't want to miss out on the next run up. Potentially to 6,000 for instance. So the market does it time and time again. It's just something to look at near support or near resistance. If the market's extended, if it's not extended, probably a good example to look at is look at the ASX. I mean, we look at the CFDs on the open, and if we just go on the open, look at this for example. When it's only a minor level, this is the half an hour chart on the ASX. At open, bang, wash out. The market's up, so it can tend to time and time again, and this is going off the futures. The futures market will wash out a few traders because they know, you can see that that's clearly up. There'll be people with stops under there that may have gone long, in the close on say Friday morning, and they go long-term view, I hold my stop under there. It's washed them out, maybe washed out a few people, put them back on the sidelines, and then turn around and gone straight back up for the rest of the day. And like we said, we're up, what are we up, 50? 40 at the moment. So the ASX the SPY futures or the ASX CFD can do it time and time again just prior to the open. So it's good just to watch the open just at, was it 10 to 10? That's when the futures open. Just 10 minutes before the ASX starts opening. Just look at a 30-minute chart, even a 5-minute chart, 10, 15-minute chart, but something in lower time frames just to see, okay, there's a clear resistance up there, and just see what happens. It could wash out the resistance and then roll over from there. So sometimes it could be a bit of a heads up on what the market tone could be for the day. Do you understand what I'm talking about there with washouts and putting, I guess, traders on the sidelines for further fuel for the market? Yep, I know there's a bit of a delay, so I'll just have a sip of coffee while I'm waiting. Do you understand, Dave? Is that clear? Ha ha again, I'm guessing. All right, let's I'll just wait to see if there's any comments, but we'll get into the Aussie now. I don't mind that Aussie at all. Again, this is a 1 hour chart, so we'll just chill it out a bit. And we've been watching this Aussie just kick on from that support right down at where's it, about 71.50. It's just been pushing up, pulling back, building a base. We built a minor. Let's just delete that anyway. But there's a minor level just in here, 75.13, which it worked. Yeah, true. All right, we've built that minor level there, which has just lifted off that level with some high lows, and it started not really getting ahead of itself, but I don't know. I think that was over a number, Aussie CPI or something that had that good run up, spike up. And you can see there's a lot of, that was a good base holding some high lows. It didn't break through that key high, but as soon as it did, bang, it went on with it. And then that was getting extended. You can see here on the hourly chart, it's probably extended on some different time frames. So you probably could have expected a bit of resistance up there, shaking the shares out of traders so the big boys can buy up. Yeah, look, it's not so much. How do you explain it? It's just a lot of the futures does it all the time because they just hammer it. They know there's probably going to be stops there because people in the futures market probably tend to have tight stops on things, especially retail investors, retail traders. And they know when it's a key level that's pretty obvious, they can just bang it down a bit, tick off some stops, and then bounce. It can bounce straight back up. It just puts people, like we said, on the sidelines. And the ASX, they may have just had some standing buy orders on there, whatever below support. And basically, if they're not buying, someone's just nothing much is happening. You know that people are going to get a bit tentative, I guess, and wanting to sell. The bears start coming out. No one's really buying it up. They get nervous. It just starts touching below a level, and they trigger their own stops, or they, triggers them to get out, and they get out and bang straight back up again. So, some markets, it's hard to say that that's what happens. It's just I guess some of the pros know that that's what happens time and time again, so they're watching for it all the time. Where are we on the Aussie? So we're talking about that high lows building. Once it got up here, that's probably getting extended on different time frames. Bit of heat out of the market. It's popped back up there, made that double top, and then we started building some lower highs. One on here, washed out these recent lows. So what was that? It was 76.30, and this spiked down too. Just washed out that here. Tried to go again, and then started holding some minor higher lows back up, retest, which is all. This is all really holding that trend line, that longer term trend line, which is good. I mean, I'm more concerned when it breaks that significantly and then makes a lower high. But when you get this type of price action spiking up, that lower high, it's still holding that trend up, and it could just roll back over and wash. That's why you just got to be careful with your stops. You may have to have another go at a long position, which in essence it's worked out quite well. When we look at, I guess this is probably the first real sign that something is going to be, we're probably leaning towards washing out the top side. That with that little push up to 76.63, and then we pulled all the way, fell all the way back down to, holding that support line again. But this here is ideal because you know that we've got that little sign there. We're holding higher lows. It's starting to look good. The market's contracting in on itself. So really, you'd expect it to break one way or the other. With that little sign there, I'm leaning towards a break higher with these higher lows holding as well. So, to enter, if we can just say, just through those highs, if that was a nice little entry and you're looking at holding your wrist just below here, because once if it gets up through that high, okay, breaks it out, then there's a good chance that we're definitely broken out of that contraction and we're holding. We did a lot of work around these highs at around that 76.40. Bang, 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 started perking up. When we broke through, we got up to 76.88. Again, a bit of it's running into that resistance area. So it's looking good on the Aussie at the moment. The stochastic's in a good level. I think that's still going to hold some higher lows and just work its way back up through these highs, say at 7,700, and then on we go. But that's looking good. Go a couple of more. The euro, we're wanting to see signs of it holding that higher low around this support zone, but it's not at the moment, and it's just down at this major, say 106.20, 25, that sort of support area there. It could easily hold that and start lifting, but I think the key area is really around that. What is it, 106.50? So we start lifting and push up through here, and then we may get a bit choppy action sideways, consolidation, and then you want to see that high low build and then work its way up. A bit like the Aussie, if we see that type of zone, this is in contraction. I think the euro is going to be slightly different. We don't know. We don't know at the moment, but it's down at a key level at the moment. We'll just have to see how that goes. There's a bit of nervousness, I guess you'd say, out in Europe. So the election's coming through, so that's probably why there's just been a bit of selling in that currency. If something gets worked out, bang, you'd expect it to take off, especially if the US dollar keeps heading south. Pound, haven't taken a big look at the pound to be honest, but just looking at quickly, we had that wash out of the highs up at 128.80. Just going back, let's just take a look at a bit of a longer term chart. Yeah, it's sort of still got key support here, and I think there's a key level just above that where it is at the moment. So really, it's still holding that. It's sold off, consolidated for quite a long period, then roll over down to 120.35. Spent a lot of time. We've just potentially got that double bottom, which it retested just here. It was on the 16th of Jan, I think, at 120.30, retested, and we're starting to head up. So really, a major double bottom. It's got a high here to contend with. You don't know exactly what's happening. This is a 4-hourly chart, by the way. So we don't know what's happening, whether this is going to be a lower high, a bit like this price action start to roll over, or whether this is contracting low and then bang, off we go. But we'll have to keep an eye on that. I think the pound's slightly different to the other two, but then you get a weaker US dollar. It's probably going to add to the buyers here. It's going to give them a bit of reason to buy. But what I wouldn't mind seeing, this could easily just head down and then start holding some higher lows, and then we want to see this type of price action lifting up to build that major high low in here, as opposed to compared to that support level at 120.50. Makes sense. Otherwise, it could just roll over from here. We head south from here, head down, started to attack that support zone, maybe wash it out, lift back into support, build a lower high, and then we go down again. At the moment, I'm sort of inclined, just because this price action, a bit of a wash out of the highs, a bit of a wash out of these lows here, and then bounce back. I'm sort of inclined to think this is more going to be, because of that major long-term double bottom as well, that this could be a high low building for another leg up. But we'll see how we go. Any questions just on those currencies there, guys? We got a bit sidetracked there. What I want to take a look at now is this is an alert on the S&P, and this probably goes a lot to explain the way we look at a market, what we like to do. It's probably more significant on the maybe more so on the currencies and indices. So I'm just going to sip of coffee. So just before, any questions on what we've just talked about? All right. You're good with that, Dav? I know you're listening now. You're in trouble. All right. So we've got This is the S&P, and what we were looking at this, our first alert was at this stage. Yesterday's alert level, okay, it was right here on this candle, if you can see that. So what we were looking at that stage is major support here. We've lifted up, and we've been consolidating, washing out these highs, come all the way back down, which the market does, time and time again. On the index, just what we said, washing out those highs, uh, washing out those highs at 22.98, and then it rolls over. So it catches people out, those longer term. If you got caught with the longs, you're buying on stop here, just above those highs, so this previous high, expecting this to go on with it, you got stopped into the market. There's no place to have your stop really from a technical perspective, but down below 22.87. And then eventually got stopped out here. I mean, if you got it way down there, that's, for me, that's too big a stop. I don't like that. So that's why this sort of price action, if I'm looking at trying to trade off the half an hour, I don't like that as such. When it comes down off support and it just extends into the highs, and you've got the markets, extended to the top side as well. So I look at that when I sort of see these factors lining up. It's come off a support level into a resistance level. I wouldn't want to buy on a break out of this major level purely because the market's extended in there. So I think if I'm going to get in, I'm probably going to be washed out. That's sort of what I look at. I'd rather, if this market was in overextended to the downside when it was up here, okay, that could be a different story. There could be a lot of people ready to come in, and a lot more buying on there, and you get that acceleration higher. If we don't see the acceleration higher, I'd probably be inclined just to tighten things up and just see what happens. But that's why I'll probably be more inclined not to be trading something like that. But when you get, then what the market's done is conned down, retested that support zone at 22.87, and then started lifting. And then when we got this washout, and I do like to see that, because that anyone who's been buying it in here is probably more often than not, they're going to have a stop below that major low. If they've been buying it in here off support, they're holding, they maybe bought some more, or had a go, run up here, took a small profit and tried again. When it washes out and comes straight back into that zone again, that's a good sign it's just a stop run. Just ticking off those stops. Yeah, 2 rejections at 22, like that. 22.98. You know that they've had a couple of goes at it, and it's ticked through, but it's just struggling. So when you get it back down to this side at 22.87, so once it can't get through there, the next target's probably that support, and it's come down, it's washed it out. So that's a good sign. When it pops back up and it starts getting this price action back and retesting that 22.95, we didn't mind that at all. And you can see the MAs, what we look for. MA is to cross up a 20 and a 50 EMA. They were on the upside. So at this stage, when we looked at it and putting together all this evidence, you've got a major support zone at 22.67. It's lifted off that, just below a major resistance level at 23.03. When you see this type of price action, then with the washout, all that is adding up to me as a bit of a run to the. It's going to take a shot at the highs, and so we alerted to that. And not only that, there was a what we look for is to see where people are weighted, especially probably more the retail investors. And we know from our proprietary signals that it's they were weighted to the short. There's a lot more shorts than longs built up. So they've been building up. Shorts been building up here, expecting that to probably be a major lower high. And once we saw that, there's quite a few things adding up in our favour, and we did like that. So that's why we put out an alert, for this price action to pop up. And it did. It just went on with it, and it went actually quite strong. It pretty much went ideally. What you can see, these higher lows holding. Break up through here would have been an entry. You got not really under any pressure too much. It retested that 22.95, and then bang, up she went. And that's just squeezed. It's just a major short squeeze. I hope you all know when I'm talking about a short squeeze. Anyone that's short is going to put pressure on them and squeeze them back out of the market, put them back on the sidelines, and really putting some pressure on. That's why you can see that a short squeeze when you ride, it's going to get that accelerated price action, acceleration higher, retest, and then accelerated again. So your trade premise is good. Okay, if it just sort of goes up and then drifts lower and just keeps going well below that level, then you probably got that trade premise wrong. Even if that's it ticks through 22.95 and falls short of 22.98. But there's probably going to be some short stops built up here. Not only here, they're going to be built up above 22.98. from so maybe these people trading in here, maybe people are short from back here, here, and here. They managed to stay in. They've still got some stops in there. It's ticked them off here. Maybe it's come back in. So anyone, once it stops, it's failing to push back below 22.95. If you're short from here and you've seen that original run up and you're still short, you didn't have a stop, whatever the reason, and it starts lifting again, you're probably more, if your risk is, if you're running risk properly, you're probably just going to, take it on the chin, bail and buy it back, buy your short position back, and that's probably what you get with that secondary acceleration higher. So that was beautiful from that alert we sent out at that time on that candle. It worked out to a T pretty much. The only thing we got wrong was how far it went. We expected probably it was just pop up through 23.03 and then maybe drift a bit lower into the close. It didn't. It just kept going on with it. We sent another alert around this stage after we saw that washout. I was at that stage. I thought we could get another secondary squeeze up higher, which it did end up doing that. And the ideal level is, if you're long from anywhere in here, hold your stops below that level, because if you get it, if that is a short squeeze and it's the same reverse as this, sorry, not a short squeeze, but a bit of a washout to the highs, you expect that to build a lower high and then roll over. I mean, the market was strong, and you can see this stochastic was overextended and it really didn't go down anywhere. There was a high probability it was just going to keep squeezing those shorts. So it looks good. Sweaty palm moment. Yeah, here's a sweaty palm moment. If you're holding short here and you got through that and you saw it come back, saw it lifting again, sweaty palm moment. And up here too. So when you get that type of stuff there, if you were shorting it off that resistance because it's looking extended, yeah, you're going to get nervous. And you can see the whole high lows holding this little, I get push up, a pull back. It's only on a minor scale, but on the smaller time frames, you get some buyers really hammering that, knowing that they're going to get a short squeeze. So yeah, that's just something, I guess, what we look for, and just adding a few different signs, a few different things together, what we're seeing on the technicals and what we're seeing on the charts, put them together with a few little indicators we like to look at too, and just know that the probability, if that was going to go, we're going to rewrite fairly quickly. If we're wrong, we're not risking much, if that makes sense. So just got a phone call coming. Let's mute that. So does that make sense to you guys? Does that make sense what we're looking at? Just before we get into a few of these stocks. So yeah, that's so far so good. That's turning out. If we were happy to get in there, say at 22.96 for instance, what are we up there? 23. What's that? That's 620 points, which is ideal. That's really nice. No questions. So there you go. That's just thought I'd bring this to people's attention. Something we alerted to on Thursday, went well. Didn't expect it to keep going on, but yeah, it kept going on. So just to take note of when potentially traders can get, it could be a short squeeze or a long squeeze. When everyone's buying off support, expecting the market to kick higher, exactly the opposite can happen. The market could roll over. All right, any more questions? If not, we'll go on to, is it Nick's stock, DGR? Oh, we'll take a look at that now. Let's just see what the market's at. Oh, it's nice. What did they get to? 243. A2M's going to probably tick over 245 today. If anyone's got this, you probably find that if that gets through 250, it might accelerate a bit. So just keep an eye on that if you've got A2 milk. Where are we? All right, what was that? DGR. That's a weekly. That's kicked on. All right, just at a quick glance, just start off at monthly. That's let me get my drawing tool. There's only, this stock to me, if you're watching Nick, it's looking good. I don't think there's any doubt about that. It's gone. Yeah, it's gone up a bit hard, but it's still, there's nothing to say this can't keep going. Just get myself together. Right, you had that, this was way back in 2007, I think, you had that big push up, and that was pretty, well, you would say pretty quickly rejected, but this is a full year. You know, the next few months got sold off hard, come back down to make some new lows. Just delete that off. Just took out the previous low, um, and that's anyone that sort of bought it late are just getting a bit obviously grumpy with that sell-off. It's pushed down, took out the low, but then spent a good part of a year doing nothing through here. It did lift off there, come back and retest those lows. Potentially it's a minor higher low, not too bad. Had another lift up here, and then it's obviously sold off again and back down to these lows, and built another support through there. Good part of 1, 2, 3, 4 years, 3.5 years, and then it started lifting off recently. The key level from the monthly is up towards that 21 mark. Just keep in mind that level, and we've probably got a little minor level. We're going to find probably a bit of resistance there at around 15. The only thing I notice here, I know this is a monthly and all, but the monthly is getting to be extended to the upside. So this move up here, it's saying to me, it's just what we discussed, I guess. It's come off a good, divergence, however you want to call it on the stochastics. You had that little push down, had another go out here, got held up. Buyers are soaking up any more selling, and after this long period of time, there's probably not going to be much selling. Anyone that's been holding it for a few years is probably a bit annoyed with themselves by then. And then you've got it lift off, so you've got a good little acceleration to resistance, and that's where we're currently at, around that 15-cent mark. Where do we trading at 15? Up into that zone. Just for a minute there, guys. So it's extended up there. Now, if we go down to the daily chart, sorry, the weekly, just take a look at the weekly. Don't forget, we're up at 15, just ticked above that. Really, it's probably half a cent above that little resistance zone we're finding up there, around 15. And again, the daily's up towards that, sorry, the weekly's up towards that extended zone up here as well. And down to the daily, again, it's getting extended. So pretty much all the time frames, you're getting extended up towards 15. Now that's really positive there. There's nothing to say it can't keep going. It could just go bang straight through 15 and on she goes up to 21. The major resistance at 21, but like we said before, to me, look, we may need, I wouldn't buy it up here, that's for sure. For me, my risk is going to be all the way down here. And like we see many times when it accelerates up from some 2 cents up to 15, so if you're holding it somewhere, even at 4 cents, what's that? It's nearly 400%, 350%. No one's going to give up those gains quite easily and ride it through a major pullback. So to me, that could easily come crashing down. I guess I've got to rephrase that. It could easily do that, but the fact that it's looking quite positive after many years of doing nothing, I think there's a few people with an eye on this. What I would like to see, me personally, is that a bit of heat's taken out of this market, just like we said. So I think there's quite a few people obviously have got it on the radar, are looking at it. It's not a heavily traded stock. It's done about 170,000 at the moment. So in saying that, it could easily roll over, but it could just as easily, heat can come out of the market. The market's moved up. You say you got this level around 8 cents. It's kicked up, a little pullback here, and it's got up to 15. You could easily just contract lower. So the key level was really at around, 10? That key anchor level to this leg up. We could easily just contract lower and then find that buyers are starting to step in. All right, and then stochastics, it comes over, it's washed out a few people out of the market, but buyers are still happy to soak it up at these highs and then build. That could take, you would expect it to take a bit of time, especially on the weekly too, that the weekly is extended, don't forget, and the monthly is extended. When you go back to an extent, well, just take a step back. If it's extended on the monthly, it could stay up there for another month, but overly, still extended on the weekly and daily, really kick off hard. But the fact that they're all into that overextended zone, into a key resistance level, leads me to believe that we may just get a bit of heat taken out of this market, maybe a bit of a pullback. This is what I'd be looking for, and potentially for another acceleration higher. And if you can, get it off that major, an inside continuation, we call it, when you can see that market's contracting, it's building high lows and a pop up through. The risk is kind of minimal, but the reward could easily be a pop through those highs, and then it takes out 15 and goes straight to 21 fairly quickly, accelerates to 21. So if we get that type of price action where heat is taking out of the market, but then it gets to a point where we build some high lows, then I think definitely this one's going to be gunning for 21. So any questions just on that one there, guys? Nick, if you heard me or if you're listening later, I hope that helped. If you're listening now, just chuck in a question if you want, or a yay or a nay. But for me, it's just those three, like the three monthly, weekly, daily lining up into overextended. I think when things are overextended, it's a bit harder. You're searching for new people to find out about the stock or something to really jump in and overextended levels to kick it on higher. Um, so if it does, if we are right and it had a bit of heat's taken out to your next question is where is it going? What's going to happen? This is ideally what I'd like to see. If it gets through 13, I think this could be a deeper correction. But then you just got to really sit back and see what's the next downside level. If we take a look at that, just go back to a weekly. Maybe it's 10 and a half, another level around 8, but there's nothing much down to say probably maybe 6. But that's on a deep correction. It could easily just pull back, consolidate around these highs, around 11, 12, 13. Bit of time spent up here, maybe this type of credit, and then bang, off we go again and target 21. APX, no problem there, Clement. Just a quick glance, that's not looking bad at all. I'm guessing that's everything, is it? That's great. What do they do? Appen Limited. Is this a mining one, Clement? The guy focus coming that provides language technology. Oh, you're expanding your horizons there, Clement. That looks good either way. Let's get back onto the chart. Uh, it does look good. That type of price action is really nice, and you can see that's contracted lower. We potentially have a higher low built at 270. Now that high low is not confirmed until we pop up through this high at 310 on the weekly basis anyway. But in saying that, this was really that push up here. You see that green candle, and then we roll over, took out those lows. This push up, and we just washed out that high. That high was at 305. We just washed it out, got to 309. Only a few cents, but that washout is really, for me, as a first indication. Well, let's draw it. As a first indication, which well, we'll go to the weekly. First indication that this market could be ready to pop up. And if you just draw up, there you go. And that also just broke out at potential that contraction lower. So that weekly could be set to resume that. You can see it was getting squeezed in with that move down. The market was squeezing in on itself. And remember what we said previously, or if you knew, what we're looking for is contraction into expansion. If you can get contraction into expansion, you get it at the right time, and you get that market expanding higher or lower if you're short, and you're getting those accelerator moves. That's what you want, because you tend to minimize your risk quite a bit, and then your upsides could be quite quick. And that's what you're looking for. When you're right, you know it fairly quickly. They can just bang pop up. If you're wrong, you might have to sit through a bit. But if that price action is telling you that it's going from contraction to expansion, that's all we're ever looking for. And this one potentially could be it's contracted low on the weekly. Started to break up. We just broke up through, say 305 thereabouts with that little kick up. We pulled back into the zone. So that for me, it could be a high low. So go down to the daily. It's just, so that's it there. Just remember all that price action, what we just said. So we're at this stage, we're just going to look at the hard right edge of the chart. Hard right edge, I like that. And you can see one thing that stands out too is that, see, it was down and oversold, and if it was a weak market, we should have been headed towards 245. We didn't. We held up at highs around 270. And the market, the selling was quite strong. So this stochastic to me is telling it's quite strong on the move down, but the buyers are soaking up quite easily. So that's a good sign. Through 305, that little spike through, we built some lower highs, potentially just go through again. Same, rinse and repeat. I think today, you bought it into it today, it's probably a really good sign. You hold your stop below here. I don't see anything wrong with that. So that, what we just drew in there was just contracting lower on a daily basis, remembering that weekly is breaking out of contraction, just broken out of contraction. That's looking like it could next port of call would really at least, and this is where it's good to get in at these sorts of stages and look for it. You're getting in nice and early on early price action when like we said before, the outcome is unknown. All right, we're trying to get into the unknown, and then once other traders start seeing it and start getting more confidence and buy into it, hopefully we've got something up our sleeve. We've got some profits to lean on, and we're not risking potentially if people's waiting for a breakout. Some people want confirmation through 305, say they want to buy on a break there. They stop in the same spot. We're sitting on some profit when they're just starting to buy, and that might, if that nothing happens then it starts rolling over, then we can get out. They get out of the loss. We could potentially just get out, reassess, and with a small gain or break even, and then go again. So that's the idea behind it anyway. But either way, Clement, it's looking good. Thanks for that one. So keep an eye on that, guys. I think it's got a lot of things adding up for it. Major high there on the weekly, and that the only reason we're thinking that's confirmed and we're trying to front run that move up to 305 is that it's breaking out of this contraction. Push, lower high, push all the way back down, and then pop. So 1, 2, W pattern, Davin likes to call it, and then pop up. Looks really nice. Anything else, guys? So I take a look at what's happening. A2M, go. Bugger that we just got done on the low. It's 235 low today, and really, yeah, we got done on that 235, a buyback, a half only, but would have been nicer now. But look at that, that's getting a bit extended too. SAS is looking like it's starting to lift up. One good thing we did, oh no, that's great. I didn't notice this one. We're in on AMA from, don't remember, 10, where's my spreadsheet? AMA 103.5, somewhere around here. I think it was this break up through this level, 103.5. Took it through there. Stop was down here. I don't know where the stop is exactly now, but that's pretty much been green candles since we got in. What are we sitting on at the moment on that? Not the same price. It's only for nearly 5%. Probably sitting on about 5% at the moment. I think that this move, and look at the weekly, could project it through 115. If we start targeting 115, I think we're at least, if it starts, markets, it's getting a bit extended up there on the daily. The weekly's got a bit more puff left. If that's the case and we run up to 115, may look for a partial, but we'll see how that goes. But that's looking great. My offense just died a bit at 106. AJX, that's what I wanted to say. That's great. Look at that. So we're about a half a cent out of exiting that. There we are. I don't remember where we had our stop, but down around 61, 62, I think it was. 62.5. It got down to, actually, it got 63. All these lows through here, 63. So we're prepared to get out at 62.5. Never got there, and bang, up we go. Great day on Friday. Another good day today so far. AJX, what are we in at? 71. So now we're back into the green, which is looking good. And I do think that it's a bit choppy. It gets a bit choppier this Alexium, but that price structure is looking good. If we pop up through this high, I think it could spike up, and that's what I'd love to see. The spike up gives us a chance to take some profit off the table, take a partial exit, and just let the rest run. So I'm not watching ARB. Oh, look at that. No worries, Michael. Let's take a look now. So that, without a doubt, is in an uptrend. So just, I guess what we'll chat about is, what are we on? We're on a weekly. All right, so the weekly's in an uptrend. It's moved down on the daily, but there's two things I reckon it actually doesn't look too bad. The first thing we always like to do, if it's an uptrend and this is, I guess, fairly negative price action, you've got that push up, a pullback, we just popped through those highs, a deeper pullback and washed out the lows, and then we've gone to, rally again up to, we didn't take out those highs, so it was around 1850, and then we've rolled over and taken out the lows. So you see that if you look at that alone, you go, oh, this is going to roll over big time. Or maybe that's what you think. That's what I could think. So the next thing to step back is look at the bigger picture and go, well, where's their anchor leg? Because we know that if it doesn't break the anchor, it could just be a contraction for poised to go bang again, wash out a few long positions, late long positions. So we're always talking to buyers that are towards the end of the run, wash them out, doesn't roll over and go again. I'll just read that in a second there, Clement. Um, yeah, I think what the next thing we're looking at is just those higher lows and where's the anchor for that current move up. And for me, it's still down at around that 1450. So on the weekly basis, that this leg up, it's been held up. The most recent price action is still been held up down at 1450. So this could be, it's had a good strong move up from 1450 to 18, and it's getting choppy. A bit of profit taken in there, and it's had that push lower. And generally, if it doesn't take out the highs, it's going to turn around and take out the lows. But if it's all in context to the most recent anchor and it's still holding above it, there's nothing to say that this price action is starting to roll over. It's going to lose steam. It's still in an uptrend on a weekly, and the good thing is, it is a weekly still. Good thing is, it's overextended to the downside, so it's getting overextended. The selling is getting soaked up quite well above the anchor, so that's always a good sign to just keep an eye on it. So obviously, next thing, go down to the daily. That's the anchor down here on the daily. Sorry, on the weekly, down at that 1450 zone. We'll draw that, and we know. And on the, so we've got down here, 1450. That's our anchor level for this current move up on the weekly basis. Now so we're looking, this is a daily leg up, and it's the same principles, higher high, higher low. It's moving up like this. It's starting to get, we got up here, washed out the highs, washed out the lows, made a lower high and pulled back, washed out these lows. So that daily's, it, you're looking at heat coming out of the market, like we mentioned, it's still coming out of the market, but in context of the weekly, that weekly's not broken until we get through 1450. And then anyone longer term holding it will maybe wash out, start getting the wash out if we push through 1450. But the weekly we're holding up above this anchor and it's extended on the downside. Now the daily's also extended to the downside. So that on a daily move, it's getting soaked up. So really from here, if we were looking to buy and target a run up through these highs, we'd want to see that's the most recent move down. It's just popped up. We want to see high lows holding, even a slight bit of contraction, and then start to bump up from there. So then you get some longer term traders going, okay, starting to look pretty good, and we may get that acceleration. So again, what you're trying to get is that risk reward scenario where it's held higher lows and starting to break out potentially through this type of price action. You know where to put your risk. It's quite easy to see. Small risk, and the return, even if it goes up to 1800, risk reward could be 2 to 1, 3 to 1. Just on that, but the fact is that you could be another weekly leg higher, and that could easily take it up through 1820. So the risk reward is quite well and truly in your favour there. But really, I'd like to see some more contraction here above this major weekly anchor level. Hold above here, maybe even hold above this little low here at 1550, because it starts rolling over from here and just pushing down. That may just go down and break 1450, but again, I mean, we don't know what's going to happen. But this is what I'd like to see, a bit of contraction in here. Sellers run out of steam. The short-term sellers run out of steam. It's washed out probably this daily leg high. Anyone who's bought in here is starting to get washed out. Some more buyers start stepping in, and we get this contraction, and then bang, up we go again. Hope that makes sense there, Michael. But definitely that weekly's up, and that weekly trend's still holding, even with this price action. This is suggesting some weakness, but if it holds up above that weekly anchor, there's still another daily move up. We get this again, start building from this price action, and then, bang, 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 up we go. High lows, high highs. All right, it makes sense. Just reading your comment there, Clement. Just swing traders preferred strategy is where rather than sell half, you would start the pyramid and stop. Yeah, definitely. I know, Devin knows a guy too. There's a guy in the US which would just before getting mentored by Devin, pretty much, I was guy in the US, I'd like to listen to him, and his style was a bit different. He traded mainly the E-mini. I mean, he traded everything pretty much. I haven't heard from him from a long time. I don't know if Devon's heard from him in a long time, but he would trade pretty much like you say. I prefer to look like half in and let the rest run, or if you got, with futures, I think it's just a throwback from trading currencies, indices, futures. Say you buy 2, 3, 4 contracts and just edge out as you go up. So we're trying to take advantage of this leg up. But with stocks, you could easily, especially when you've got um, price action like this, you're starting to build, and then every time you can just add to it because your premise. The problem is you could get up to a high, and this is why I tend not to do it as such. You're peering the most, so you're moving your average up as well. Don't forget, your average entry is gonna go up. But if you're quite strongly biased, and you probably do it on stocks because it's a good story, and that's where your fundamentals come into play more. Um, if you're looking to build, you've got to have confidence that you're right on your analysis. And say, for instance, this type of stock, that's going to be a high low. If you start getting in here, that's your initial entry, and then you pop up, you pull back, and okay, if that's going to be another high low, then my premise is this is another major leg higher. So you're looking for that to be another major leg, not just potentially retest up to the highs. Then you add, you can add here again when you get that, add on a break up through here, or the way you add to it. But definitely wouldn't mind pyramid into the stock, but there's got to be more factors for me. Or that's probably a different way to look at it. You've got the weeklies going up. It's had a pullback in the weekly. Um, so sort of on those weekly pullbacks, but just remember, I mean, there's different ways to look at it. Remembering 1, 2, 3 legs higher, things start getting a bit overextended. So I'd hate to be my average moved from here to here. Well, not to here, sorry, right up, and it gets up and rolls over, and I'm back to break even fairly quickly because I've loaded up. I just prefer to do all in and then out because I know my stats support that. I think the guy in the US, his stats were lower, as in strike rate. It's because he'd be chipping down a fair bit, say on the futures, but when he gets it right, when he takes advantage of a good, strong leg high, he's got the whole leg. By the time gets extended and he hits his targets, he's loaded to the hilt, and then he would do really well out of that leg up. Whereas the way I trade, and maybe the way Davin trades too, probably wouldn't do so good on that. But at the same time, when it gets a bit loaded, he's quite heavy into it, and he's not right. He's got to get out fairly quickly, where it's a lot easier to take profits on the way. I just like to load in, take profits on the way up, rather than load up on the way up, and then hit your target, and then what you've got to. I guess it all comes down to what you want to do. There's no real, as you probably tell by the way I'm talking, there's not any real easy answer, but I think that's definitely a good way to trade. It's just not my way, I guess. Long-term positional play, yeah. It's always got to do, I guess, with your view too. Your longer-term view. If this is a weekly move, well, let's just go to it. Let's just try and get a better example actually. If your long-term view on your weekly, so if you're getting a move up on your weekly and then you're getting contraction on your weekly, and you're expecting this exact same price pattern to start playing out, then definitely, you could buy one here, pulls back, it goes, accelerates, maybe buy a second parcel there because you know that weekly potentially is going to have the same top to bottom as that move. So you project it up, your target's going to be up here, got a lot of room to move. You can definitely, it's a weekly chart, so loading up using your daily charts, I guess. All right, guys. I hope that makes sense, just what we've been talking about there. I hope everything we've gone through, it helps a bit. Probably have to finish it up there. Actually, AGO. I'll quickly go over the AGO then. Looking good, Susan. That's looking good. Atlas sign. I've actually had my eye on this, and I mean, looking at the week, it doesn't mean too much. It's come from highs. I don't know what's happened to get that real gap down, from here to here, but spent a lot of time doing nothing. But it's just this most recent price action is looking good. It's just, I guess, getting to that point where way I like to, let's just start that again. Sorry. The way I like to look at it is not quite, that setup is not quite happening just yet. So we had, it's come off a good base through here. It's held higher lows, higher low. You can see that bit of contraction through here. And as soon as you get that break out of contraction, it's got a bit of a pennant flag, whatever you want to call it. I never know what they're called, to be honest. Started to break up. Some minor higher lows, and then you got that acceleration, bang, straight up. For me personally, I don't, we're at that crux now, but it's because of this strong leg up from say 2.7 to 5. I wouldn't buy it just yet. I'd want to see a bit more heat come out of that market, a bit more, energy biased to be washed out a bit more. Because for me, that anchors all the way down here at 2.6 for this leg up. This leg up has been anchored, the most recent anchors here, so it could easily contract all the way back down to 3.1, 3.2. And again, it's that same price action like what we saw here we want to see. And it hasn't, you get this at this stage here. We broke out of it, out of contraction just on those candles, that one candle, even the second one. So to buy when you're going from contraction to expansion, that's what we want, contraction, expansion. If you bought in there, great. At the moment, we're not. We're sort of just there now. We're just on that resistance level, really. So I'd want to see it pop up through maybe 4.7, and then I'd potentially look for an entry because that could, could go on with it. We don't know, but just for me, that type of setup, which I like to look for, I think it's getting a bit extended. I haven't seen the setup just yet, but definitely the longer term weekly looks great. That even just sorry, let's just skip all that. This price action is looking good. Pick up, pull back down, retest the lows, and start to hold higher lows. It's washed out this level around 3.5, say. It's recent high. Washed that out, and it's washed it out quite strong. And we're just in that midst of maybe a bit of contraction. We don't know if that's going to roll over from here or just go on with it. If it does, if we do get that set up like we just said, popping up through here, and then a pullback, like I said, if we just get this, just draw it. So we've had a major wash. That's a little plus. Just draw that. So that major wash to the downside, and we're straight back up to the resistance. If we get maybe a pop up through, a bit of a pullback, then then there's definitely an entry signal through here, looking for that acceleration higher. But we could easily just bang straight through that low and just contract even further and do this type of price action down here. All right. So I think it's early stage. I think there's a few things just because of the market, the way it's accelerated to the highs up to 5. I just think it's got a bit of a deeper correction to do. Who knows? Could be completely wrong, but definitely that's looking good. It's starting to lift off that support at 1. That looks like ready around to bust through 5. So just keep an eye on that either way. All right, I better call it a day there, guys. Like I said, thanks very much for joining us. I hope you enjoyed that. The next chat we'll do a live stream is on Thursday, same time. So we'll go through a few different things again. Just take a look at the markets between, what happens between now and then. Just go through that. See if this market continues on higher. We start targeting 58, which is on the cards over the next few days potentially. We'll just see how that plays out. Chat a bit more on Thursday, so we'll do some videos the next couple of days. But just keep an eye on it. And thanks very much for joining us, guys. Hope you enjoyed yourself and speak to you soon.